for watching the Wealth Guard Show. I'm your host, Tom White. Coming up, we're going to have this week's IBD 50 portfolio. We'll take a look and see how we did. Boy, was it a wild ride. What a week for a vacation. And we're going to take a look, too, at the Bin Laden compound and take a look at the evidence and see what the evidence suggests happened inside that compound and why they will not release pictures of the body anytime soon. And when I'm done showing the evidence, I'm sure you'll be clear they're not going to be releasing those pictures. And then we're going to finish it off with our economic mechanics from this week. We'll take a look at the U.S. dollar, the commodities, the 10-year Treasury yields, and, of course, the stock market. We'll have a forecast for next week and let you know what we expect. All this coming up. And we'll begin with our IBD 50 portfolio. The way this works, we started out on January 28th with $10,000, and we divided that $10,000 into 5 different stocks, $2,000 apiece. Each week, the worst performing stock is sold, and a new stock is put in the portfolio as a replacement. We're going to take this portfolio to $1 million or bust. Let's see how we did. And our holdings going into the week, we started out with Altera Corp coming in first place last week. We're starting out the week there, $45.99. And Tempur Pedic cooling off a bit, starting the week there, $61.73. Sina Corp coming in the middle of the pack with $124.56. Paso Pipeline, the senior stock in the portfolio, acquired February 11th, $37.17. And it's Polypore International, the new addition to the portfolio, starting the week there, $61.77. Got total cash in the portfolio of $147.75. Total value, $11,977.18. One of these stocks, the worst performer, is about to get sold, and a new stock is about to enter the portfolio. Let's see how we did. And coming in, number 1 this week, it's Polypore International. And it's a new addition to the portfolio, opening the week at $61.77 and closing the week at $67.62. Total gain to the portfolio, $234 even. Things were not as easy as they look, though, with Polypore International. Let's take a look at the chart. And on the chart of Polypore International, you can see we took one heck of a ride starting out the week. First 3 days down and down hard. And we recovered strong after earnings Thursday and Friday and recovered with a nice gain. Down below, point 1 shows stochastics have crossed, turned bullish, and they're heading to bullish territory. Point 2 shows that the MACDs, they're rising, and the histogram bars, they're rising sharply too. We gave both of those a green mark. Up on top, point 3 shows relative strength index is beginning to climb too, so that's looking stronger. We gave that a green mark. And coming in, number 2 this week, it's Altera Corp. And Altera Corp opened the week at $48.70 and closed the week at $48.15. Total loss to the portfolio of $24.20, but good enough for second place. Let's take a look at the chart. And on the chart of Altera Corp, down below, point 1 shows stochastics. They've been in overbought territory and have been declining. Look like they're trying to head back higher again, so we gave this one a yellow mark. And above that, point 2 shows the MACDs. They're converging a bit. The black line is moving in on the red, and the blue histogram bars, they've been declining. They have not turned bearish yet, so we gave this one a yellow mark. And up top, point 3 shows relative strength index bouncing a bit and trying to make an effort higher. Gave that one a yellow mark. And that brings us to our number 3 performer. Coming in, number 3 this week, it's Tempur Pedic. And Tempur Pedic has been one of our better performers in this portfolio, but it's been slipping a spot the past 2 weeks. Opening the week here, $62.78 and closing at $61.76. Total decline to the portfolio, $46.92. Let's take a look at the chart. And on the chart of Tempur Pedic, down below, point 1 shows the stochastics have been in decline. They're making a move higher, and they're trying to indicate a bullish signal. We gave it a yellow mark. Point 2 above that shows that the MACDs, they're still in decline, And the histogram bars are below zero. They're flattening a bit. Gave it a red mark. And up top, relative strength index. It's bouncing a bit. Maybe heading higher here, so we did give it a yellow mark. And so that only leaves room for one more stock in this portfolio. One of the stocks is going to remain. The other is going to get sold. The first stock up. It's El Paso Pipeline. The senior stock in the portfolio. Battled for this position last week and won. Finds themselves here again. The second stock up is Sina Corp. And Sina Corp is a Chinese internet company. Coming in. Number 4. And remaining in the portfolio, it's El Paso Pipeline. And El Paso Pipeline, a senior stock in the portfolio, remains once again. Open the week here at $37.04 and closing the week $36.17. A loss to the portfolio, $47.85. Let's take a look at the chart. And the chart of El Paso Pipeline, it shows that the worst may be behind us. Down below, 0.1 shows stochastics. They've been oversold. And we got a bullish signal turning up here, so we gave it a green mark. 0.2 above that. MACDs are still in decline, but the histogram bars, the blue bars, are starting to rise a bit, but they are still bearish. We gave it a yellow mark. And up top, the relative strength index looks like it's bouncing on some support there and heading higher. Gave it a yellow mark. Gonna wait to see if we can give this one a green mark. And that means Sina Corp is out of here. And opening the week at $134.75, closing the week at $125.19. $162.52 loss to the portfolio. Let's take a look at the chart. And the chart of Sina Corp shows why it's out of here. Down below 0.1 stochastics. They are oversold. Look like they're trying to recover, but no real effort here. Still gave it a red mark. And 0.2 above that shows that the MACDs, they're still in decline too. And the histogram bars, they're still very negative. Gave it a red mark. 0.3 up on top shows relative strength index, possibly trying to make a bounce here. No clear evidence of that either, so we gave that a red mark. And our final results this week, we had Polypore International coming in first place, a gain there of $234 even. Altera Corp came in second place with a loss, $24.20. Tempur Pedic came in third place, $46.92 decline there. El Paso Pipeline surviving the portfolio yet again, loss $47.85. And Sina Corp is out of here. $162.52 there we lost. Whew. Got cash of $114.75 in the portfolio still. That means I'm going to get a new stock. And every week we get a new stock in a portfolio. And this week's new stock is Edwards Life Sciences. Edwards Life Sciences, symbol EW, closing the week at $88.20. Got a market cap, $10.13 billion. Average daily volume there, 1.3 million. Edwards Life Sciences develops products to treat advanced cardiovascular disorders, i.e. heart valve and peripheral vascular disease. Finally, a company I can understand. Take a look at the chart. Chart looks pretty good. Down below, 0.1 stochastics, reaching for overbought territory, but still rising. Gave it a green mark. And above that, 0.2 shows MACDs. They're ascending, and the histogram bars, they're rising too. Gave that a green mark. And the relative strength index, it's continuing along an upward trend. Gave that a green mark too. Overall, expecting good things from Edwards Life Sciences. And our holdings going into this week, we start out with Polypore International, starting the week $67.62. And Altera Corp starting the week at $48.15. Tempur Pedic starting out $61.76. El Paso Pipeline, the senior stock in the portfolio, surviving yet again, starting out $36.17. Edwards Life Sciences, the new addition to the portfolio, got 24 shares of that stock at $88.20. We're carrying cash of $159.18 in the portfolio now. Total value of the portfolio of $11,929.69. A small decline from last week, and hey, we'll take it because Monday, Tuesday, Wednesday, we were down hard. That's why I said earlier it was a good week for a vacation. And then Thursday and Friday, we rallied back like nothing had happened. So overall, we're going to take this small little loss and head into next week and lick our wounds. Coming up, we're going to discuss the Bin Laden compound and discuss why they're not going to show you those pictures of the body. Still ahead. Well, after all these years, they finally got Bin Laden, and all the questions remain of what really happened in there, and why won't they show the photos, and is he really dead? Well, I tell you this, he is really dead. I believe that for a fact, and I think the evidence will support that here. We look around at pictures of his compound here, and military choppers came in the midst of the night and landed in there with our Navy SEALs teams. And I believe they caught him completely by surprise, as he had no weapon, and it didn't seem to be any real protection or any threats around there, and preparations for any kind of a raid as this. He's been there long enough to feel comfortable and safe without a gun, so we know that. He wasn't paranoid, and he was real close to a military base there in Afghanistan. And we know, too, that he definitely heard the raid unfold as the helicopters came in and started hitting the first floor and working their way up to the third floor. I think the report said something to the effect that it took like 3 minutes or something, 3, maybe 5 minutes, I don't know, something like that. They're pretty quick, but no doubt Bin Laden knew it was coming. As we look inside the bedroom of Bin Laden, we can see where the pool of blood is where he was killed. And a couple things on Bin Laden. First, we know that he was reportedly 6'4" to 6'6", in that range there, and we know, too, that he was shot in the head. I was looking at these pictures here and trying to figure out, well, what really happened in here? What does the evidence here point to and suggest? And I started thinking, okay, well, if he's 6'4" and he gets shot in the head, why isn't there any blood splatter on the bed, on the sheets, or on the pillows that we can see? There's no blood splatter on the wall that we can see. Nothing there on the bed that we can see, on the rails there. All we see is that pool of blood there on the floor and all over the carpet, and but no blood splatter anywhere. So if somebody was shot who was standing 6'4" to 6'6", shot in the head, it would be reasonable to expect that there would be large amounts of blood splattered everywhere, as the blood, well, let's say it just pumps out of the head. You can see again where he fell on the floor there, and big concentrated pool of blood. I think I figured out what was going on in this room by looking at that evidence. The fact was, Bin Laden was not standing at all. In fact, we can see by the pool of blood there, clearly that's where his head was. And I propose Bin Laden was shot in the head, as he knew all this was coming, while he was in the midst of prayer. And that is why they will not show you those pictures, because the pictures are going to show that Bin Laden was literally shot in the top of his head. And the only way he's going to be shot in the top of the head is if he was on the ground, kneeling in prayer with his head down to the ground, the way the Muslims pray. So to avoid any kinds of disruptions and controversies and fighting amongst the Muslims out there, we just soon got rid of the body really quick, and suffice to say, Bin Laden is dead. But I contend he was in fact shot in the head. As we take a look at the other evidence here, we'll take a look at the other room here. And you can see what I'm talking about here as you look again at the carpet where Bin Laden's body died. And look at the bed rail there. You can see on the wood there is no blood splatter. Looks like there could be a little bit of blood, maybe an inch above the leg on the bed there. But no blood splatter, which means he was shot in the top of the head. And the blood splatter would have went into his chest and legs as he was kneeling. So that would have prevented the blood splatter from coming up after the bullet penetrated his head and splattering around the rest of the room. It just kept it there on the floor where he died. And obviously that would cause a lot of problems if it got out. Hey, he was in the midst of prayer, and we shot him, and he was no threat because he had no gun at that point. And I think there's going to be political damage there if they did bring him back alive. There was really nothing they can do with him. So, I mean, you could take it from there. What would happen if they left him alive? What would happen if the evidence showed what I'm talking about, that he was in fact shot in the head, and I think the evidence here at least shows that. You'll probably hear more of this coming out here too as forensic experts start looking at this and reviewing the scene on what happened here. I'm not a forensics expert by any means, but I know a little bit about it. I took some classes years ago for police training, but I can see here it's just for an untrained eye that there is no blood splatter anywhere, and with a military weapon like that, you would have to expect it. And so Bin Laden is out of here. Top of the turban to you, Bin Laden. Anyway, back to our show. We're going to do our economic mechanics. Well, we begin our economic mechanics from this week, and we saw a reversal from last week as things changed, as the commodities moved lower and the dollar is moving higher. And, of course, the interest rate's moving lower as the Treasuries are doing well. And we always begin with our first three principles. Number one, the U.S. dollar and commodities, they move in the opposite direction. That's exactly what we're seeing happening this week. Number two, commodities and interest rates, they move in the same direction, and we're seeing a little bit of that too. Number three, high interest rates, they're bearish for stocks. And we'll start with the U.S. dollar. And the daily chart of the U.S. dollar is beginning to show a little life down below 0.1. The stochastics, they've been oversold for a very long time and have finally started to recover here. Got a bullish signal as they move a little higher, gave it a green mark. 0.2 above that shows we got confirmation from the MACDs as the black line crossed over the red. And the histogram bars, they moved higher over 0, gave that a green mark. Up top, the relative strength index, 0.3, shows that it's also rising sharply, gave that a green mark. 0.4 shows that we got a little resistance ahead. I think things look pretty good up until that point for the US dollar. Let's take a look at the weekly chart. And on the weekly chart, down below 0.1, the stochastics, same position. Got a bullish signal, though, in oversold territory as the black line crossed over the red, gave that a green mark. 0.2 up above that shows the MACDs have not recovered yet. They look like they may start to converge this week. And the histogram bars, they remain flat and negative, but starting to show a little life, so we gave it a yellow mark. Up top, relative strength index, 0.3, shows that it's beginning to bounce a little higher too, off of some support. So we gave that a green mark for the US dollar. And so summing up the US dollar, we analyzed the daily charts and the weekly charts. Over on the daily charts, we found the stochastics, the MACDs, and the relative strength index were all positive, gave them a green mark. Over on the weekly charts, found the stochastics were positive, gave that a green mark. MACDs, they were neutral, we gave that a yellow mark. Relative strength index was positive though, so we gave that one a green mark. Overall, we had 0 red marks, 1 yellow mark, and 5 green marks. And we'll take a look now at the commodities represented by the CRB Index. And on the daily chart of the commodities, we see some damage here down below 0.1 stochastics. They were overbought for a while and got a big bearish signal here in the beginning of the week and have been declining since. Gave it a red mark. 0.2 shows that the MACDs confirmed it when the black line crossed over the red, and the histogram bars have dropped sharply. We gave that a red mark. Up top, relative strength index dropped too, and looks like there's a little spot of recovery there, but I don't know about that. We gave it a red mark. And 0.4 shows we got some possible support in this area. Not sure if we're going to catch that support or not. May catch it early in the week here and then resume a downtrend. Let's take a look at the weekly chart. And the weekly chart of the commodities looks like we may be setting up for a ride here. Down below 0.1 shows stochastics have been overbought, and they've been hanging out up there for a while, but now we've got a bearish signal and we're heading lower. Gave it a red mark. 0.2 above that shows that we've got some unfortunate confirmation of it. MACDs have crossed the black line over the red, and the histogram bars have fallen below 0, so we gave that a red mark. Up top, relative strength index has also dropped sharply, gave that one a red mark too. Overall, it looks like we got some trouble for the commodities. And so we analyzed daily charts and the weekly charts, and on the daily charts and the weekly charts found the same thing. Stochastics, MACDs, relative strength index, all negative, all looking bearish. We gave it a red mark. For a total, we had 6 red marks, 0 yellow marks, and 0 green marks. And we'll look now at the 10-year Treasury yield. And on the daily chart, the 10-year Treasury yield, looks like we got some trouble here too. Down below, 0.1, the stochastics have continued in oversold territory, trading sideways with no sign of recovery. We gave it a red mark. And above that, 0.2 shows that the MACDs, they're continuing in decline, and the histogram bars are negative, so we gave that one a red mark. And up top, the relative strength index is also dropping, so we gave that a red mark too. And over on the weekly charts, down below 0.1, the stochastics are continuing negative there too. No sign of recovery, we gave it a red mark. 0.2 shows we got confirmation when the MACDs, the red line crossed over, the black line crossed over the red, and the histogram bars have fallen below 0, so we gave that a red mark. 0.2 up top shows relative strength index falling, and it's starting to trend lower too, so we gave that a red mark. And so summing up, 10-year Treasury yield, we analyzed daily charts and the weekly charts. And on the daily chart and weekly charts, we found the same thing. Stochastics, MACD's relative strength index, much like the commodities, all negative. Gave them all red marks. For a total, we got 6 red marks, no yellow marks, and no green marks. And we'll take a look now at the Dow Jones Industrial Average. And on the daily chart, Dow Jones Industrial Average, down below 0.1 shows stochastics. They've been overbought. We got a bearish signals. The black line crossed over the red. They're heading lower. We gave it a red mark. Above that, 0.2 shows the MACDs. They're turning negative too, as the black line's crossing over the red and the MACDs. And the histogram bars, they're still positive, but they're beginning to fall below 0. It looks like they're a threat. Gave it a yellow mark. 0.3 up top shows the relative strength index. Been falling. It's trying to battle back after Friday. Don't know if we're going to hold here, so we gave it a yellow mark. But also, we got a little support here, right around the 12,400 mark, and I don't know if we're going to hold there or not. Let's take a look at the weekly chart. And on the weekly chart, the Dow Jones Industrial Average, looks like we're losing a little steam here. Down below, 0.1 shows that the stochastics have reached overbought territory and is starting to turn. Gave that one a yellow mark. And 0.2 above that shows that we're riding a little tight here on the MACDs. We're still trending a little higher, but looks like we could be losing a little steam there too, as the histogram bars below are flattening out. So give it a yellow mark. 0.3 up top shows relative strength index. Maybe also losing strength as we made a peak here that's lower than the last peak, and it looks like we may start to be tailing a little lower. Going to be cautious on that. Gave it a yellow mark. And for the Dow Jones Industrial Average, we analyzed daily chart and weekly chart. Over on the daily chart, found stochastics and MACDs. They were neutral, and we gave them yellow marks. Relative strength index, though, is negative, so we gave that a red mark. Over on the weekly charts, found that the stochastics, the MACDs, and the relative strength index were all neutral, so we gave them a yellow mark. For a total, we got 1 red mark, 5 yellow marks, and 0 green marks for the Dow Jones. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones, looking for where the strengths are and where the weaknesses lie. We did that by weighing the number of positives versus the number of negatives and coming to a conclusion that way. And this week, we saw for the first time in a long time, the US dollar showed some strength, and we got number 1 position this week. We have 5 green marks, 1 yellow mark, and 0 red marks. And number 2 this week, we had the Dow Jones Industrial Average. It slipped a lot last week. It's falling. We had 0 green marks, 5 yellow marks, 1 red mark. And we had a tie for last place with the 10-year Treasury yield and the Commodities CRB Index. We had 0 green marks, 0 yellow marks, 5 red marks. So you can start to see the relationship here as the dollar has strength, the commodities show the weakness, and the commodities and the 10-year Treasury yields they're moving in the same direction, so we're getting confirmation there, and that should put pressure on the Dow Jones here. And we take a look now at our market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. And this week we saw the strength in the US dollar. It came in first place. It's under the bullish column there in green. And number 2, we had the Dow Jones Industrial Average, which was where the dollar is last week and since fall. So Dow Jones is in neutral territory. It looks like it could be heading lower here. And in last place, we had a tie with the 10-year Treasury yield and Commodities Index, both bearish. This means that the 10-year Treasury yields are heading lower, which means money is flowing into the 10-year Treasuries themselves. And that makes sense as we're at the end of QE2 here, where the Fed is out there purchasing our Treasuries. So that's the volume that's going in here and pushing rates lower at this time as we end that in June. And the commodities and interest rates, we know they go in the same direction, so it makes sense they're in both bearish territory. Last week, the commodities were bullish and the 10-year Treasury yields were bearish, so we knew something didn't make sense there, and they had to converge. And it was just a matter of if the 10-year Treasury yield was going to move more positive or if the CRB Index was going to move lower. And this week we got that confirmation, and the dollar, the strength there confirms all of this. So that's our market gauge. Well, that's the show for this week. Tune in again next week and we'll do it again. We'll have another look at the IBD 50 portfolio and hopefully we'll crack that 20% mark. We'll have another look at the economic mechanics too. We'll do another forecast and we'll see how we did. Let me know what you think about bin Laden and the tale that I had there. I believe he was shot in the head in the midst of prayer, and that's why they're not showing those pictures. Not that I've got a problem with him being shot in the head. I'm glad he's dead. But for now, I'm out of here.